there's no turning back. Given the choice between a financial crisis and defeating Iran, what do you think the United States will choose? Even the world's richest people are racing against time to restructure their portfolios. How much time do we actually have left? You'll find that during last April's stock market crash caused by the tariff war, even leading stocks like Nvidia plummeted by 50%. And then what happened? The tariff war was quickly called off. Nvidia rebounded from its absolute bottom, doubling in value. Normally, such a sharp drop followed by a sharp rise is the absolute fastest way to make money. But even those well-known billionaires like Warren Buffett, Ray Dalio, Jim Rogers, Bill Gates, and Jensen Huang didn't buy in at the bottom. They were all holding massive amounts of cash. Why? The first possibility is that these elite investors, with all their first-hand information, misjudged the market and missed the most profitable opportunity. The second possibility is much more terrifying. The real money-making opportunity hasn't appeared yet. The money earned from that last stock market crash simply wasn't attractive enough to them. Because a stock market crash doesn't necessarily cause a crisis in the US financial system. But a crash in US Treasury bonds absolutely would. In other words, these billionaires aren't waiting for a stock market crash. They are waiting for a US Treasury bond crash. If Iran successfully destroys the demand for US Treasury bonds this time, it will trigger the most terrifying financial apocalypse in history. It will also trigger the most aggressive wealth reshuffle we have ever seen. What does all of this actually mean? Hello everyone, I'm from the Stewardship Finance Academy. Many people don't realize that the US used to be a manufacturing powerhouse. Its own factories made countless fortunes selling to the world. But as Americans became wealthier, hiring domestic factory workers became incredibly expensive. Workers were unwilling to work overtime, efficiency dropped, and unions formed to strike, forcing factories to pay massive compensation. American capitalists quickly realized that this method of production was too exhausting and barely profitable. Because of this, the US fundamentally transformed. It went from being a major manufacturing country to a major spending country. They made other countries produce for them. The attitude became, I, the US, give you orders and give you money. You sell me cheap products and work for me. Wow. Why were foreign countries willing to just work for the US? Because only with US dollars can you buy oil. Only with US dollars can you buy the world's most advanced technology and weaponry. Only with US dollars can you easily do business with other countries. This is the so-called dollar hegemony. Without dollars, you simply can't do anything. So how does the US make its money if it doesn't run the factories? In short, it's all about finance. The US invented something called US Treasury bonds. This financial tool allows the US to borrow back all the money the rest of the world has just earned from them. Today, you sell me a product and earn my dollars. Tomorrow, you lend me those exact same dollars and I can continue buying your products. The obvious question arises, why are countries willing to lend their hard-earned money back to the US? Because after they earn those dollars, the US just keeps printing more of them. This means the dollar sitting in a bank vault becomes worthless and depreciates over time. The things a single dollar can buy become fewer and fewer. Therefore, countries worldwide are forced to invest their dollars. But what investments actually make money safely? Gold? It generates no interest. Stocks or Bitcoin? They are far too volatile and could easily wipe out an entire nation's treasury. And then the US steps in and says, lend me your money and I'll pay you guaranteed interest. That is the power of US Treasury bonds. But here's the massive, looming problem right now in 2026. The US currently owes $39 trillion, but its gross domestic product is only $29 trillion. This means the US owes $10 trillion more than it even earns. So why aren't people panicking that the US can't repay its massive debts? Because everyone knows the US can just print money to repay them. The US repays its debts not by earning money, but by firing up the printing press. What it ultimately gives back to lenders are devalued US dollars. But as a foreign nation, you can't refuse to lend it back, because if you don't, you have nowhere safe to put your dollars. So here's the key point you need to understand. Did the term US stock market appear at all during this entire global cycle? No. Why? Because the US stock market is not the core of this economic engine. What actually is the US stock market? Think back to how the US economy performed during the 2020 pandemic. GDP absolutely plummeted. But did that mean the US economy was actually bad for everyone? Think about it. Restaurants closed, companies shut down, millions lost their jobs. Does that mean it was impossible to earn money? Is it possible that Americans can earn money without actually working? Yes, through the stock market. During the pandemic, the US stock market only fell for a single month. Then the Federal Reserve stepped in, kept expanding its balance sheet, printed trillions, and the US stock market soared to new highs. In other words, the pandemic causing GDP to fall only meant that the working class Americans weren't earning money. But the US stock market boom meant that the wealthy could earn even more money without lifting a finger. Can you understand this dynamic? This is the core of the US financial system. The US borrowed money from the world, took a portion of that cash and lent it to massive corporations at zero interest. This made these American companies appear to be incredibly profitable, aggressively driving up their stock prices. Well, this allowed ordinary people who held US stocks to profit from the market's artificial rise. Therefore, US stocks were merely a tool for profit sharing. They were the effect, not the cause. So was the US tariff war in April of last year stopped because of the sudden stock market crash? Actually, the US stock market had already started its sharp decline back in February of that year. The US government watched the stock market plummet for 2 whole months, yet it still went ahead and launched a tariff war in April. The stock market crash wasn't what the US government and the Wall Street capitalists were truly concerned about. What they were absolutely terrified of was the collapse of US Treasury bonds. As long as the US could continue to borrow money and Treasury bonds could be sold, the US stock market could eventually recover and rise. Therefore, the US government only stopped the tariff war after just 2 days of a sharp, terrifying decline in 30-year US Treasury bonds. After the economic conflict ended, the stock market quickly recovered. But what about those US Treasury bonds? If you look at the US Treasury bond ETF, its price has been falling relentlessly since 2020 and is currently sitting at rock bottom. In other words, US Treasury bonds are becoming unsellable, and the US is losing its ability to borrow money. Until this sovereign debt issue is resolved, any rebound in US tech stocks is merely a temporary, meaningless illusion. Simply put, US Treasury bonds are the roots of the tree, and US stocks are just the leaves. If the leaves are damaged, the tree will survive. But if the root is destroyed, the whole tree will eventually rot and collapse. Even if the stock market leaves look green and healthy right now, if the debt roots are rotten, the whole system is coming down. These American capitalists holding mountains of cash aren't waiting for a simple stock market correction. They're waiting for the total, systemic collapse of US Treasury bonds. Right now, the US and Iran are locked in a severe conflict. This could very well be the match that lights the powder keg. And the real bomb hidden deep within US Treasury bonds is powerful enough to level the global economy. Now, I'm not a prophet, just a businessman, an investor, and an educator here at Stewardship Finance Academy. If I tell you what I see coming beforehand, some will accuse me of selling anxiety. But if I say it after the crash happens, people will say, I'm just speaking in hindsight. So I'm telling you this in advance. Even if just one sentence from this video helps you avoid a financial disaster, my mission is accomplished. If you want to protect yourself and learn how to navigate this, click the link in the description to join the SFA Free Stock Investment Masterclass. And if you want to save this information, just hit the like button on this video so it saves to your playlist for you to review as the market shifts. Because mark my words, the world is about to change incredibly fast. So fast that you might not even have time to react. Throughout history, global war has actually been very advantageous for the US when it comes to borrowing money. During conflicts, the world's frightened capital usually flows into the safest asset available, US Treasury bonds. Imagine you are a wealthy business owner in Vietnam right now. Oil prices have skyrocketed globally. Your country doesn't have enough oil reserves, and many local factories are forced to close down. Without affordable energy, production halts, and your local economy starts to crumble. This causes massive inflation, devaluing your local currency and shrinking your hard-earned wealth. So what do? With few good local investments, you are forced to move your money out of the country. But right now, the whole world is suffering from this energy crisis and economic stagnation. After looking around, only the US appears to be a safe harbor. Even though the US is engaged in conflict overseas, the homeland remains relatively insulated and safe. As the world's largest oil exporter, America has its own massive oil reserves, meaning soaring prices haven't completely derailed its domestic economy. Therefore, US assets, especially Treasury bonds, traditionally offer the safest and most stable returns in a crisis. Plus, because Treasury bond prices have been falling for years, the interest rates they pay out have become very high and attractive. In a chaotic global market, you might actually earn more risk-free interest on US Treasury bonds than by running your own business. Historically, this causes a stampede of global capital rushing to buy US Treasury bonds, driving their prices back up. But something broke. Just this month, on the 24th, the US auctioned $69 billion in 2-year Treasury bonds. Normally, this is a boring routine auction. Everyone rushes in, buys the debt, it sells out instantly, and everyone goes home. But what actually happened this time? Wall Street insiders described this specific auction as exceptionally brutal. Even veteran traders who have seen it all found the results completely outrageous. Why? First, the winning bid interest rate spiked to 3.946%. What does that mean? It means that in the exact same auction, just 1 month prior, the rate was only around 3.455%. In just 30 days, the US government was forced to pay about 0.5% more in interest just to convince the world to lend it money. It's exactly like going to a bank for a personal loan. The bank says yes, but suddenly doubles your interest rate. Why? Because they no longer trust your ability to pay them back. Today, Ultra-wealthy billionaires can beg banks for loans, and the banks will offer them incredibly low rates because the trust is there. But when a struggling citizen goes to a bank, they are forced to accept sky-high interest rates because they are viewed as a risk. Right now, the US is paying increasingly higher interest rates just to borrow money. This means the US is now begging the world for loans rather than the world scrambling to lend to them, and it gets worse. Before every bond auction, there's always an expected consensus interest rate calculated by the market. For example, this time everyone assumed the final auction rate would settle at 3.93%. Generally, when demand is high and everyone wants this debt, the final rate actually comes in lower than expected, maybe 3.9%. Conversely, if no one shows up to buy, the US government has to aggressively raise the interest rate payout on the spot to attract hesitant buyers. And that is terrible news. Usually, if the US has to raise the rate by just 0.005%, it's considered unacceptable by the Treasury. If it jumps by 0.01%, it is categorized as a disastrous auction. And what happened this time? It increased directly by a staggering 0.016%. This equates to American taxpayers paying over $20 million more in interest over just 2 years. But this isn't just about the extra money. It is a blaring siren telling the world that even during a geopolitical war, foreign demand for US debt is drying up. Most shockingly, the proportion of domestic US financial institutions buying this debt plummeted from 42% last time down to an abysmal 16.5%. In other words, even America's own banks and institutions are refusing to buy US Treasury bonds. Ultimately, the primary dealer banks that are legally required to participate will be forced to swallow these unwanted bonds. So the massive question is, why is the world suddenly rejecting US debt during a time of war? Because when the US panicked and urgently halted that tariff war last year, it fully exposed the terminal weakness of the bond market. And here is the crucial geopolitical pivot. Most people thought this Middle Eastern conflict would end quickly. On paper, the difference in military strength is incredibly significant. But right now, the adversary is utilizing asymmetric warfare. They land a heavy blow and immediately disappear. So what does this actually achieve? Why do Middle Eastern oil nations conventionally only accept US dollars? Think about it. These resource-rich nations are overflowing with immense wealth. We wouldn't want to conquer and control them. They are wealthy business people, not sprawling military empires. Why would they fight the wars themselves? Solution has always been simple. Hire the biggest bodyguard on the block. And who is the biggest bodyguard? The United States military? But the US doesn't just want cash for protection. The US made a deal. If you agree to only accept US dollars when you sell your oil, no yen, no euros, then I will build military bases in your country and protect you. Simply put, America provides the military umbrella. The Middle East settles all global oil transactions exclusively in US dollars. Why is the US so obsessed with the right to settle oil? Because oil is the literal lifeblood of global industry. Without oil, your supply chains halt, your factories go dark, and your military is paralyzed. If any country wants to buy oil to survive, they must desperately earn US dollars to do so. So what is Iran doing right now? They're directly striking those US military bases in the region. They don't even need to win a conventional war. They just need to prove one terrifying point to those oil-producing nations. The US military can no longer guarantee your protection. They want the region to watch American defense systems struggle against cheap drones and advanced missiles. They want these nations to question why they are forced to sell oil only in dollars if the bodyguard is bleeding. In other words, Iran is systematically destroying the global demand for the US dollar. If the world no longer needs US dollars to buy oil, who on earth is going to buy US Treasury bonds? This conflict is rapidly dismantling the petrodollar system. They aren't stopping there. They are directly targeting Western financial infrastructure in the Middle East. Why target the banks? Because while there are no troops inside, there are billions of US dollars. When nations buy oil, those massive US dollar transactions are routed through these very banks. By threatening this financial infrastructure, the message to Middle Eastern elites is clear. Your money is no longer safe in the American banking system. That is exactly why we are seeing massive amounts of Middle Eastern capital fleeing toward Asian markets right now. The ultimate goal isn't just physical destruction, it's to force a global exodus of capital out of the American financial system. And what about the tech sector? The US is desperately trying to lead the AI revolution. Current US stock market is almost entirely propped up by these mega cap AI companies. But developing artificial intelligence requires more than just microchips. It requires an absolutely massive amount of cheap electricity. The US needs to partner with countries that can provide this endless cheap energy. Last year, US executives flew to the Middle East to secure hundreds of billions in funding and energy deals. The Middle East has the capital and the energy, and the US has the AI technology. It was a perfect match. Middle Eastern sovereign wealth funds pledged to invest $600 billion. What happened? Conflict escalated, and completed data center infrastructure was targeted. Billions of dollars in servers and infrastructure instantly turned to ash. If you were a tech titan today, Zuckerberg or a Bezos would, you really risk pouring hundreds of billions into a regional war zone to build AI data centers? Remember the three pillars we discussed. The world needs dollars because of oil, technology, and global trade. Now that all three pillars are fracturing, how long can the US survive by simply printing money and borrowing from the world? This is exactly why investing legends are warning that the dollar is in severe danger. So many retail investors falsely believe that as long as they buy an S&P 500 index fund and hold it forever, they are safe. Usually, if you don't know how to pick stocks, experts tell you to blindly buy ETFs like SPY, QQQ, or VOO. Right, but recently, Warren Buffett has been aggressively dumping his holdings. He is cashed out and is sitting on an unprecedented historic pile of cash. If the greatest stock market guru in history is running for the exit, what does that tell you? It means that successful investing is entirely about timing, market conditions, and economic cycles. If someone promises you a stock will double in 5 years, but it plummets by 80% over the first 4 years, do you have the stomach to hold it? And what if you hold it and it never recovers? Your capital has depreciated, inflation has eaten your savings, and your money is trapped. If the probability of losing money on a trade is 99%, would you take it? Most people would say absolutely not. But professional investing isn't just about win rates. It's about the asymmetric odds. You don't need to learn 100 different complex strategies. You just need one proven system that applies to stocks, gold, crypto, and Forex. If you haven't mastered a system like this yet, I am urging you to pause this video, go to the description, and click the link to join the SFA Free Stock Investment Masterclass. Right now, as long as you subscribe to the channel, the normal registration fee is completely waived. It is 100% free. If you wait until the market breaks, this opportunity will be gone. Now, listen closely. Geopolitical conflict alone might not instantly collapse the US debt market. It may just push borrowing costs higher. The real nuclear bomb that threatens to completely shatter the dollar is not located in the Middle East. It is a group of shadow entities hiding in the Cayman Islands, holding $1.8 trillion in heavily leveraged US debt. What exactly is going on here? A group of massive hedge funds is playing a dangerous game called basis arbitrage. It sounds complex, but it's actually simple. Imagine an apple sells for $10 on the east side of town and $11 on the west side. Every day I buy an apple for $10, walk across town, and sell it for $11. I pocket a safe $1 profit. That is arbitrage. Now, imagine I borrow massive amounts of money from a bank to buy 1,000 apples at once. I sell them all and instantly make $1,000. That is leveraged arbitrage. Basis arbitrage in the bond market uses extreme leverage to exploit tiny price gaps in US Treasury bonds. There is usually a microscopic price difference between the spot price of a bond and its futures. Contract may be just 0.01% or 0.02%. Normally, you can't make real money on a 0.01% margin, but if you use leverage buying bonds, using them as collateral to borrow more cash, buying more bonds, and repeating this loop 50 times, you can magically turn that 0.01% into a massive 7% annual return. Wall Street loves this. But there is a fatal flaw in this strategy. What happens if the price of the apples suddenly drops? What if you bought them for $10 with borrowed money, but the market crashes and you can only sell them for $8? If the underlying price of US Treasury bonds falls, the value of the collateral these funds pledge to the banks drops below the required margin. When the banks demand their money back, these funds are forced to aggressively dump their US Treasury bonds onto the open market to raise cash. This panic selling triggers a catastrophic, cascading collapse of the entire US Treasury bond market. This isn't theoretical. This bomb has already almost detonated twice in recent history. First time was in March 2020, during the initial pandemic panic. Do you remember the stock market tripping the emergency circuit breakers 4 times in a single week? Warren Buffett said he had only seen a circuit breaker trip once in his entire life before that week. The media told you the pandemic caused the crash. They lied. The real culprits were these highly leveraged hedge funds blowing up their basis arbitrage trades. US Treasury bonds plummeted. These funds frantically liquidated everything to pay off the banks, pulling the entire global financial system down with them. That was strike 1. Strike 2 was in April of last year during the tariff war. Did you honestly think the government backed down just because the S&P 500 lost a few points? The real reason they surrendered was the complete collapse of liquidity in the 30-year US Treasury bond market on April 7th. The US Treasury Secretary literally warned that if the volatility didn't stop, the US bond market would completely freeze. The CEO of JP Morgan Chase publicly stated that the US Treasury market had become a terrifyingly unpredictable storm. The government immediately stopped the trade war because they knew that if the Treasury market broke, the United States was finished. Both of these massive global panic events were caused by this specific group of leveraged traders getting margin called. So, do you think Wall Street learned its lesson and stopped playing this game? It's not a chance. During the 2020 collapse, the total scale of this basis trade was around $500 billion. That alone almost broke the world. Last year, during the tariff panic, the scale had ballooned to $1 trillion. And today, in 2026, the size of this leveraged time bomb has reached a staggering $1.8 trillion. That is more than 3 times the size of the 2020 crisis. Entities registered in the Cayman Islands, a jurisdiction completely immune to standard oversight, now hold more US Treasury bonds than Japan, the UK, and China combined. Having a fund in the Cayman Islands is the ultimate get-out-of-jail-free card. When their reckless bets blow up, the American taxpayer and the global economy foot the bill. When the system broke 20 years ago during the 2008 financial crisis, did these firms go bankrupt? No. The Federal Reserve stepped in to save them. Instead of letting the reckless capitalists fail, the Fed turned on the money printers and printed infinite liquidity. The central bank rushed in, bought up all the toxic assets at face value, and personally bailed out the billionaires. They slashed interest rates down to 0%, practically giving free money to the banks to lend right back to these exact same funds. The moral hazard was complete, because these funds knew the government would never let them fail. They became even more aggressive with their leverage. And last year, when they were on the brink of blowing up again, the US halted a geopolitical trade war just to protect them. The government and the Federal Reserve will do anything to prevent this bond market bubble from popping. But what about this time? Can the US government force an end to the current conflict in the Middle East? Even if the US retreats, the adversary is fighting a decentralized guerrilla war. They strike and disappear. And what about the Federal Reserve? Can they just print infinite money and slash rates to 0 again to buy up the collapsed assets? In 2020, US inflation was practically 0, giving them the runway to print. But today, if global oil supply chains are disrupted and energy prices skyrocket, inflation will surge. If inflation is raging and the Fed tries to print trillions to bail out the bond market, the US dollar will completely collapse into hyperinflation. This bomb almost destroyed the system twice, and both times the government barely managed to defuse it. But this time, the detonator is no longer in America's hands, and the payload is 3 times larger than it was in 2020. That is why the real existential battlefield right now isn't overseas. It is right here, inside the US Treasury bond market. This is exactly why the smartest money in the world, Buffett, Dalio, Gates, are sitting on mountains of cash refusing to buy the dip in tech stocks. They aren't waiting for a 10% correction in the S&P 500. They are bracing for the structural collapse of the US debt market. Because they know that when the bond market breaks, every single asset class on earth will be liquidated at rock bottom prices. When that day comes, whoever holds cash will be able to buy $10 worth of pristine assets for just $1. This will be the most brutal financial reset in modern history and the greatest transfer of wealth we will ever witness. So you might be panicking, thinking, I need to quickly invest my money before inflation eats it. Listen to me, especially in times of extreme systemic risk, you absolutely must not invest blindly based on emotion. If you want to survive this transition, and if you want to receive our exact defensive and offensive market strategies, if you finally realize that understanding the financial system is a survival skill you must learn, then you need to take action right now. Click the first link in the video description and secure your free spot in the Stewardship Finance Academy Masterclass. Today's market update was heavy, but it is the reality we face. If you have a different perspective on the bond market, leave a comment below and let's discuss it rationally. I will continue to provide high-level free financial education every single Sunday at 8:30 a.m. to help you achieve true financial freedom. If you don't want to miss the next critical update, hit the subscribe button and turn on the notification bell right now. Please, share this video with your family and friends so they can prepare. I sincerely hope that the insights shared today will protect you and help you build a fortress around your family's wealth. Stay vigilant, stay educated, and I will see you next week.